Let's take a look at some information and charts on Ethereum Classic for Brave New Coin. So ETC right off the bat says that you can build unstoppable applications. If we go to look at some of those unstoppable applications, this is only one website, but there's very few dApps that are mainstream, let's say, on this list. And so far, it's mostly an empty cathedral for ETC. They do have a hard fork coming up in July 7th with some changes to the network code that is basically taking an old Ethereum upgrade and adding it to ETC. At this point, ETC is basically the equivalent of Litecoin to Bitcoin, where for the most part, the coding changes are basically just whatever BTC's done on their last update. And just a quick refresher on how ETC came about. There was a DAO on Ethereum, which at the time had a substantial amount of ETH held within it. There was a vulnerability that was exploited. Some of the DAO was drained, allowing the ETH to be stolen. So they voted, they being the ETH community, as far as a rollback, bailout type situation, which was approved. Now, not everybody agreed with that, and they went on to create Ethereum Classic, which does not have that rollback component, but it also looks like it's pretty handedly lost. The fork wars between ETC and ETH, no dApps, low fees, no low transactions. I'm going to look at all of that, but the best case for ETC is that ETH proof of stake blows up dramatically, and ETC is just there waiting in the wings for something to happen. It's a hedge against ETH proof of stake collapse or whatever else happens. ETH is the biggest network that I'm aware of that's ever switched from not only a consensus algorithm, but switched from proof of work to proof of stake, if that eventually happens within the next 2 or 3 years. We don't know, but ETC will be there waiting in the wings. The ETC hash rate recently exploded. I tried to look into why, still not sure why. Could be some covert mining activity, could be cloud mining. I'm really not sure. I tried looking, but couldn't really find anything. If we compare that to ETH's hash rate, around 550 terahash versus 24, right? So again, we start to compare the two networks, hash rate, block size, total fees. This is the mining profitability at 4 cents per kilowatt hour for the few ETH ASICs that exist. And this Bitmain Antminer will most likely be mining on ETC once the ETH proof of work switchover happens. If you look at the total nodes, 509 as reported by etcnodes.org, most of which are hosting, which means Amazon Web Services, cloud stuff. This isn't a decentralized entity if 375 of the 500 nodes are on cloud services. Now, ETH is really no better in that because Infura or Amazon Web Services or Google Cloud Services also host a substantial number of ETH nodes. If we look at the total annual issuance for ETC versus ETH, Ethereum Classic's inflation is slightly higher than Ethereum. Ethereum around 4.2%, ETC around 4.5%. I don't know why some of these metrics on Coinmetrics aren't working currently, but again, the evidence mounts that ETC just isn't the play. Here's the total block size, ETC versus ETH. Really says it all. The party is not happening on ETC as of yet. As of yet or as of ever, really, relative to ETH. And if you put this on a percentage basis, ETC has around 3% of the total activity. If we just look at it as a percentage of the whole. So it's harder and harder to look at ETC in 2021 like a viable network. Much like people look at Bitcoin Cash now and have always looked at it. You have a fork, and then the community decides, where's the dApp activity? Where's the devs? Where's DeFi? Where's ICOs? Where's the DEXs, right? Where's the borrowing and lending happening? It's not. ETC, here's total fees, $342 on ETC versus 5.7 million on ETH. So again, there is no way I can slice this in favor of ETC other than the initial schism, which was related to the DAO rollback, DAO hack rollback. Now that opens up the door for future rollbacks. As you've done something once, it's less immutable. For instance, if the ETH 2.0 wallet has some vulnerability in it, I can easily see them rolling back those issues. Currently, there's around 5.5 million ETH in that ETH 2.0 wallet. So for whatever reason, if that gets exploited or has a vulnerability, not saying it will or it does, that's definitely going to get reverted because it's just such a substantial amount of not only notional value, but total ETH, right? So ETC is just really a disaster hedge against ETH shenanigans. Transaction counts have been rising, but overall just remain at 2017 levels. Average transaction value spiked to all-time highs in a big way as price exceeded $100. So nothing too bullish about this. You know, as prices go up, transactions go up. It would be more bullish if this could hold this multi-month trend of transaction rise, which historically doesn't look like it will. Active addresses also up considerably since November 2020, 10x basically, and it doesn't look like those will hold either. So again, it's hard to be super bullish on ETC from that respect, from the fundamentals. You know, it's like, what would you rather hold? Something with slightly higher inflation where nobody cares about it, or ETH? You know, you're going to hold ETH. If you're going to hold something, it's probably not going to be ETC over ETH. Here's the Grayscale trusts, and one of the big reasons why ETC even exists is because of Barry Silbert, who basically said, hey, we'll pay for the development of, you know, we'll subsidize the devs basically with some of the fees from this trust. So this trust is actually one of the bigger ones in Grayscale. It's the third largest behind Bitcoin and Ethereum. And if we look at the premiums between the three, in this case the discounts, BTC the -12, ETH -8 and growing. It had been zeroed out, but now that is going more and more negative. And ETC is at -33. So, you know, I wouldn't touch this with a 10-foot pole as far as the ticker or the trust is concerned. I don't even know enough about pink sheets or whatever they're called to play around with this stuff at a discount that great. And these high premiums are related to the vesting or lockup periods where they might be up 850% above spot, but they can't sell that down until their vesting period is over. Switching to technicals, we have the MA multiplier. Green line is the half-year MA. Red line is the 5x multiple of the half-year MA. And it did its job in that it told you previously this was the sell zone. You know, an N of 1 isn't exactly statistically significant, but when we're looking at what are some possibles as far as selling the highs, buying the lows, ETC has held within these lows most of the time, below the 183 MA, and very rarely has it exceeded 5x that 183 MA. So from 60 to 100, it told you, okay, party's over, time to sell now. You know, if you're looking to sell highs and buy lows, this is a great indicator for you on any coin with enough data to look at it. This goes back to 2017 on Polo, so we can look at stuff like this. Currently, the support, the buy zone is sub 25, 50% reduction in the current price. Here's the 50 and the 200, along with VPVR, pivots, and RSI. And again, there's virtually no support until 34, 33, 30, somewhere down there. And then after that, there's VPVR support at 18. And if all that fails, it goes all the way back to its January breakout, which would be around 550. Now, ultimately, that could happen. This could Eiffel Tower all the way back down. Even though trend looks okay, this definitely needs to cool off. So I wouldn't even look at this in a serious way until it's basically back to the previous all-time high around 30. On the cloud, it's drifted below the cloud now, really for the first time in a significant way since 2020. You can see it had its breakout here, and really it held above the cloud that entire time until recently. So again, this is telling you, nope, this is not a long, this is not a buy the dip. This is not, I hope this goes higher from here. This is in a bear trend along with many of the other DeFi type coins. ETH-BTC broke this parabolic RSI rise, and it has an M double top. So even though it's still above the cloud, above the 200, this does not look bullish to me at all. Decent support at 120k sats, but ultimately, you know, this thing could just bleed, right? Like this is always what I'm expecting on any of these pops from all of these alts, most of DeFi. Just a multi-month bleed, parabolic downside is basically what this was. Doge, very similar. You know, this is Doge's future right here, is a multi-month bleed, low volume, nobody cares, slow selling. Then eventually you get a bull div at the very bottom as the parabola pukes out, and then we W, and then we go insane and do it all over again, right? Like that's the name of the game. Same thing here. Nice Adam and Eve breakout, puke for months. So to me, for most of this stuff, the run is just over at this point. You know, you missed it if you weren't in it by now. ETC versus Ethereum, basically still at the bottom of its multi-year previous range. And if anything, this looks like a rotation play from Ethereum into ETH in early January. Sorry, from ETH into ETC in early January. And this doesn't necessarily mean it's now bearish, but it's unlikely to have significant upside strength. So I like to look at ETC every once in a while just to see what's going on. You know, I don't really trade it. I don't hold it. It's been 51% attacked a bunch of times. I didn't even mention that. They've mitigated some of that risk by changing how the network factors in the hash rate. But I really don't think you can save this in the long term unless ETH explodes. So if you are bearish Ethereum in a serious way, you can either short it to zero or hope that all that money and interest flows to Ethereum Ethereum Classic if ETH explodes. Lastly, I'll just mention the ETH-BTC fund that I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can send ETH or USDC or just watch what I'm doing into the smart contract. You can see AUM, trades, allocations. You can see everything I'm doing through dexes, when I'm doing it, the sizes I'm doing it. You know, if you're curious as to what I'm actually doing, there's a FOMONC meeting today. So that should be interesting for the markets. There's also a DeFi portfolio that we have that's gotten hammered since we started it in early April. And I've had to cut most of the fund, or most of the portfolio rather, that just continues to look like it's going for lower lows. The ones that are left in here are basically things that still look semi-decent, but are also at risk for further lows. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.